Good day, sir. I am Jeffrey Slupor from BSEE 2C, and this is my video compliance for my INP grade in engineering economy. So I am going to report the engineering economy. So depreciation is a reduction in the value of an asset with the passage of time, due in particular to wear and tear. So types of depreciation. There is a straight line, means allocates the same amount of depreciation each reporting period. The second is double declining balance, form of accelerated depreciation that doubles the regular depreciation approach. The next is sum of years digits, charge a higher depreciation expense in early years of useful life of the assets. The last is units of production. Depreciation is based upon the number of units a plant or machinery produces in each year. There are various depreciation methods companies can use. So this is the example of straight line depreciation, where cost minus salvage value divided by the useful life, and the double declining balance depreciation is 2 times the asset cost minus accumulated depreciation over useful life. And the next, sum of the years digits. So this is the remaining useful life of assets divided by the sum of the year digits times depreciable cost. And the last is units of production depreciation, which is the number of units produced divided by the lifetime number of units times the cost salvage value. And next, break-even analysis. Break-even analysis refers to the point in which total cost and total revenue are equal. So breakpoint determine the number of units of revenue needed to cover total costs, fixed and variable costs. Break-even chart. This is a chart that shows the sales volume level at which total costs equal sales. So this is the representation of break-even chart, where BP or the breakpoint is equal to the FC over P minus VC, where FC is the fixed cost divided by P, which is the price, minus VC, the variable cost. So forms of organization. Business organizations has 3 forms: the corporations, the partnerships, and the sole proprietorship. Next, sole proprietorship. This is a single ownership, no sharing of profit and loss. This is a 1 man's capital, unlimited liability, less legal formalities, and 1 man control. The advantage and limitation of sole proprietorship is the advantage first, easy to start. So this is an easy to start business, easy to wind up, quick decision and prompt action, flexibility in operations, and direct maintenance of business. And the limitations of this is limited. This has a limited capital, unlimited liability, lack of continuity, limited size, lack of managerial expertise. Next, the partnership. Partnership needs trust, collaboration, efficiency, teamwork, plan, communication for business, because you are working with your team or a group of people who has the same goal for your company to make progress. Pros and cons. The pros of this organization: it has a extra set of hands, additional knowledge, reduced financial burden, and less paperwork, fewer tax forms. And the cons: less independence, potential conflict, divided profits, lack of separation of business, and individual taxation. So that was the cons. Next, corporation, a business registered by a state and operates as its own entity that pays taxes on profits. So, for example of this is Jollibee, BPI, SM, PLDT, BDO, and etc. So, those are the samples of corporation. Pros and cons of corporations. The advantages, corporations has a limited liability, easy liability of capital, perpetual existence, ownership transfer, build credibility, and for the disadvantages, complex process. So this is a very complex when it comes to corporations. There is a double taxation, conflict of interest, and lacks business confidentiality. And the last is extensive rules. So there's a lot of rules when it comes to corporations. And that's all. That's it for today. Thank you for listening. The end.